Assuming you already know what mortgage notes are and why many real estate investors are now buying notes as an alternative to brick and mortar real estate, this video will show you just how to do it. Again, I caution you, if you are new to this, I would strongly suggest you broker a few real estate notes first so that you become familiar with the entire process by working directly with professional note buyers. So now let's outline the 4 steps to buying mortgage notes. In this order, here are the 4 steps. Okay, this is leading up to the note purchase. First, find them. Second, qualify them. Third, negotiate a purchase price. And 4, fund them. All right, so let's now talk about finding real estate notes to buy. First, you need to find them, of course. That goes without saying, really. So you need to know what you're looking for, performing or non-performing notes. Non-performing notes are problem mortgage loans secured by real estate whereby the payments are no longer being made due to financial hardship or otherwise on the part of the payer. These notes can be bought at extreme discounts. The investor buys these with either foreclosure or workout in mind. A workout is getting the payer to start paying again by reducing his monthly payments to a level that he can afford. So workouts are possible here because the investor bought the note at such a substantial discount that he can greatly reduce the payer's monthly payments and still come out ahead. With performing notes, on the other hand, the investor looks for seasoning. That is, a solid payment history which reduces the likelihood of default. If you're looking for non-performing mortgage loans to buy, don't waste your time trying to contact banks directly unless you're a well-established seasoned pro. Banks only deal in large blocks of assets, and in many cases they sell off their bad mortgage loans to hedge funds and large private equity firms at substantial discounts rather than letting the underlying real property go to foreclosure. So if you're dead bent on dealing in non-performing mortgage loans, get yourself established in dealing directly with either hedge fund managers or sourcing out private money. Another route you can go is to network with private investors who are already well connected with sellers of these distressed assets and buy them in pools with the intention of selling one-off notes to individual investors. So if you're just starting out, you may do well to start networking with these note investors through online forums, for example. From there, you can get on certain mailing lists where you can be notified whenever certain asset classes are offered. All right, so certainly you'll want to protect yourself by enlisting the services of an attorney who can, review any potential agreement with you. So these types of connections can also serve as entree to performing notes when they come up for sale. You do your due diligence as you would any kind of note purchase. Your yield will be less in these cases since the seller is making a small profit on the sale to you. But even so, these deals can still be profitable to you and tend to be much easier and cheaper to find, as opposed to implementing a full-scale marketing program at first. All right, so let's now talk about buying performing real estate notes. In the case of performing notes, you can also find these through the individual investor sellers that I mentioned before, who are already skilled at unearthing these assets directly from the note holders themselves. But if you want to maximize your profits, you can do your own marketing in order to find these individual note sellers who are or may want to sell their notes for cash. If I'm looking for performing notes today and I have any kind of marketing budget, I'm looking at purchase lists of seller finance note holders, which already have been compiled through the public records and pre-screened by experienced researchers. I used to do courthouse research myself, but it's a time-consuming and laborious process that's best left to experienced, efficient pros who do this every day for a living. I find that it's well worth paying the 25 cents per lead or whatever the going rate is when you know what you're getting. I should say that when you know that you're getting a list of actual note holders who are, in fact, holding these types of seller financed real estate notes you want to buy or broker. So you just craft your I will buy your note for cash marketing message and send it out to the list. So from our experience, for every 1,000 note holders on the list, somewhere around 2% are seriously interested in selling their notes at any given point in time. So this means 20 out of 1,000, and also those not yet motivated at that point in time will become motivated the next month, and so on and so on. 20 out of 1,000 potentially represents anywhere from, let's say, $60,000 to $100,000 in face profit, which can be well worth the $200 or so, plus direct mail marketing costs, which are proportionally very minimal. Okay, so now let's talk about buying notes through referral sources. You can and should also make yourself known to professional referral sources. The big three are attorneys, accountants, and financial planners. Okay, these are people who come into contact with note holders within their client base, and they can refer such clients who may have a need to liquidate assets to cash to you. You market to these professionals a bit differently than you would individual note holders. You speak in terms of, I can help your clients who may be holding a note who are in need of immediate cash. The professionals who get it will end up referring business to you. If you have, say, just a dozen referral sources who, conservatively speaking, refer you just one note each during the course of a year, well, that's one note per month. Anywhere from $2,000 on the extreme low side to $10,000 profit on the high side. If you end up brokering it, or anywhere from $24,000 to $120,000 extra income during the course of a year. All right, now let's talk about the next step, qualifying the note purchase. Okay, once you find potential notes to buy, you're going to need to qualify them. So the initial questions you need to ask are, 1, are you collecting payments on a private mortgage note now? And 2, what are the monthly payments and how many are there? So if they refuse or they can't provide you with this information, then really, just say goodbye. End of conversation. Don't waste your time with non-sellers. One way or another, the information you're looking for at this stage will be mortgage loan amount, a down payment amount, the terms, monthly payments, or number of payments remaining, number of payments already made, what the current balance is, property information, the underlying security for the note. Is it a single family, commercial, what is it? You're looking for a loan to value no more than 90% and ideally below 80%. So, although not all are going to fall into that category, so there is some gray area here. I'd like to look for, I should say, owner-occupied single-family homes, although I will also look at mortgage loans secured by commercial property or single-family residences with tenants with a decent payment history. Okay, so look at the terms of the note, the number of monthly payments already made, and the number of payments remaining. Okay, the note holder will already have given you the amount of the outstanding balance of the note, but you'll want to check all of these numbers yourself using a financial calculator and amortization tables. So assuming all of these things coincide with the information you initially gathered, you then determine the yield that you want to come away with. See our articles on our website, for example, about discounting a mortgage note, and we'll actually be producing some additional videos now that gets into that subject a little bit more, but at any rate, so you need to know how to discount a mortgage note to create the desired yield that you're looking for, okay? So it's just a matter of working the financial calc, okay? So you then calculate the present value of the cash flow that you will be making the offer on, and then present your offer accordingly. All right, you'll want to request copies now of the mortgage, the note, and the closing statement, copies, not the originals at this stage, and then check your numbers against the actual documents. Okay, now, next step, negotiate a purchase price for the note. Okay, always make sure that when you make a written offer that spells, or I should say, always make sure you make a written offer that spells out exactly the dollar amount that the note holder will come away with and what they should do next if they would like to go with this offer. I always like to ask what they need to get out of the transaction, or why they are selling the note, or so that I can better tailor the offer and increase the likelihood of it being accepted. You know, what are they looking for? What are they looking to accomplish? Any specific amount of cash you need to come away with? Anything you can tell me, all right? So you want them to sign a preliminary agreement which gives you or your assigns the right to purchase the note if X, Y, and Z, et cetera, check out. So the language would be subject to our due diligence, for example, within a certain period of time. All right, so only when the preliminary agreement is signed will you then begin the due diligence process. Okay, so if there are no surprises, that your attorney or servicing company will draft the formal agreement along with the other closing documents. If the payer's credit turns out upon investigation to be less than initially stated, or if there are issues with title or anything else regarding the mortgage loan or the underlying real estate, for example, if the appraisal comes back low, well, the potential transaction won't move forward past this stage, or past the preliminary agreement, and the note purchase will either not take place, or else a modified offer will then be made to which the seller needs to agree to, right, before proceeding. All right, so now let's talk about funding the note purchase. All right, so once the due diligence process is complete, it is then time to close. All right, so oftentimes the closing can take place at the office of the title company. If you're having a servicing company handle all of this for you, then you need not be present at the closing yourself, nor does the seller have to be there either. Checks are cut and sent or wired or ACH to the seller, and a separate check is cut to the broker if there is one. All right, so I've outlined the process for you in terms of how to buy a mortgage note. There's a ton more information on our website at noteinvestors.com. Also, be sure to subscribe to these videos and this channel for other videos which are going to be coming up. You won't want to miss them if you're interested in the subject of note investing. All right, thank you very much for watching. Goodbye.